All right, Bulls and Bears, we are back with another dose. And what a wild day today is. Now, before we get into the financial economic news, we do have a lot of news to cover from the financial world, economics. But first, let's bring this up here. Guilty. 34 counts, folks. This I told you this year was going to be a wild year. I doubt that he'll do any actual time. There's going to be an appeal process. It's going to get drug out for a very long time. They're going to drag this out. This to me is theater. It's a show. I don't want to get too much into it, but I don't really believe. I believe they found him guilty, but I don't really believe that this is going to have any real world consequences, right? So I think it's a show. Anyways, let me know your thoughts about that down in comments. But got a lot to get into. The Dow Jones, we are seeing some weakness. Is it because of the verdict? Is it because of other things? Is it because the consumers are getting tapped out, right? People hitting their credit limits, as we said would happen by the summer. Technically, it's not summer yet, so we're a little early, but we did call this last year. We said 2024, we're going to see a lot of people hit their limits, and we're seeing a lot of warnings come out now. In fact, did you guys see this one? Another warning out of Bank of America. Bank of America CEO says U.S. consumers and businesses have turned cautious on spending. Well, they definitely have turned cautious because they have no choice. So many people are hitting their limits. They see their debt climbing. A lot of people not able to pay off the interest and the newly accrued debt because you get more debt with these interest rates. You're going to be piling debt faster and faster each month because of the accumulation of the interest. And if you can't pay it off in full, folks, it's just a matter of time. So I see this as a ticking debt time bomb. Most of America, most of Americans, I should say, are debt. They're in debt bondage, right? They have no way out of it. They work, and I say they, maybe a lot of us here do the same. You work full time, usually, if you can find a full time job, and most of that goes towards paying bills. You're not able to save money now. 20 to 30% of people in that range, somewhere in there, they can save money. They're saving up, so they're paying off their debt and they're saving up money each month. But the other 70% not able to save up money and just getting further into debt. We see that with the paycheck crowd, and it's just getting worse, right? So, how is this going to reflect in the markets? We see the housing market still being propped up. We have government backed loans now. The majority of new loans being issued are backed by the government. Why is that important? Well, the government, they can just create, or in this case, borrow endless amounts of money to buy endless amounts of mortgages from these lenders. You see how this works, right? So they can keep this market propped up longer than I think what most people think. Same is true for the stock market. You have the powers that be that can get in there, companies buying back their own stocks. A lot of different ways they can keep the stock market propped up. Um, we'll see how it reacts to today's news, with the former president and the verdict on that. So we'll see if that has any impact on the markets. Um, I don't really have an opinion either way. I've always said here that I don't think who's ever sitting in the Oval Office, I don't think they're um, very critical to what happens with the economy. We saw the former president pressure the Fed into cutting rates back, I don't know what year it was, 2018, 19. Ever since then, I wasn't a fan. The lower interest rates is what led us to this level right now. So many new homeless people, people priced out of the housing market because of the rock bottom interest rates. They kept them too low for too long. So, anyways, another story on that one. Um, Hollywood. Let's talk about some Hollywood news. And this is out of the Hollywood Reporter. Reality TV is on life support. Development and production have been sluggish since the strikes, leaving desperate workers in the lurch. All of a sudden, the faucet just turned off. So a lot of actors are going to be jumping in the unemployment line, or maybe they'll go out and get different jobs. Maybe they'll work in fast food over here. Maybe they'll do Uber driving over here. But that'll be economic positive because the phony numbers that come out will say, look at this job growth. All these actors now going out and getting part-time jobs, server jobs, delivery jobs, etc. And they can say, oh, 2, 3 part-time jobs. It's job growth. Look at all these new jobs. In the meantime, most of America continues to get further and further and further into debt without able to pay off their debt principal. Take a look at this here. you want to get a gauge on what's really happening, the real world economy, CNBC put this out. 30%, 37%, it's even worse than I thought, of Americans paid a late fee in the last 12 months, folks. If the consumer was really strong, like we're being told, would we see over 1/3 of people paying some sort of late fee, right? You're paying late fees, you're probably in some financial trouble. I'm surprised it's actually not higher, but even what they're reporting here, I think it's a lot higher than what they're reporting. But even if you just look at what they're reporting and you take that at face value, this is a very, very bad sign, folks. Did they go into much more detail? Late fees are just one consequence of making late payments, said a expert over at Nerd Wallet. Credit card fees were the most common, with 21% of respondents incurring at least one. Others had been charged a late fee on utility bills. 10% of the people said that. Rent, 8%. Wow, 8% of people paid late rent in the past year. That was a survey of over 2,000 people. So again, we have to ask you, we're being told over and over how the consumer is resilient and strong, how the economy is strong. Well, if you look at the ability to borrow money as strength, then the consumer is strong because banks are loaning out money. There's only a small portion of banks that are actually tightening, and that's about 20%. But the other 80% of banks, the ones that are not tightening, they're actually loosening the lending. They're loosening the lending. What did we talk about our last report? If you guys saw that, 0% mortgages are back. Again, back to what we said a few minutes ago, government backing most of the newly issued mortgages right now. Folks, there's so many ways they can keep this propped up that most people just don't understand it. People that were shorting the stock market and predicting a housing market crash, they've all been wrong, folks. I've always said here, inflation is my biggest worry. My biggest worry is the rising cost of living and inflation. It's going to take something major, something massive to stop this inflation right now. And if you look at what the Fed's looking at, they're looking at just a slowdown in inflation. They haven't got down to their 2% target. And in fact, if you look at the cumulative inflation, just looking at the CPI number, which is way too low, but if you look at the cumulative, not just the month over month number or the year over year number, cumulatively, we're up over 25% just in the past few years. And we know it's a lot worse than that, right? That's the official number. But when you add it all together, when you stack that inflation on top of this number, on the top of this number, it's well over 25%. Even the phony number, right? The real number, I think, is up between 50 and 60% cumulative, not year over year, but the total since 2020, right? So pretty interesting. But when they report on this, they're going to say, oh, now we need to cut rates because inflation has slowed. What about the 25% higher prices that most people can't contend with? Why don't you look at that and say, okay, maybe we should raise rates instead of cutting rates? No, they want to cut rates. They know the consumer's in trouble. They are looking for a number or a statistic or a reason to cut rates because they know, again, the consumer is having a really, really tough time dealing with the current debt and the payments. Right? Again, over 1/3 of people made a late payment. All right, we have more bad news coming out of the retail sector. We have over 400 stop and shop supermarket chains announcing closures. These are 400 underperforming locations, and I think we're going to see a lot more stores close before the end of the year. I think we're going to break 2023's record. In fact, in our next report, we're going to tell you where we're at compared to 2023 as far as store closures. All right, so make sure you come back for that one. I think a lot of you might be actually surprised when you see the number on it. All right, folks, I think most of you know this. The game that's being played right now is making sure that most banks are still issuing new credit. That means new loans, people taking on new debt to keep this ball rolling. For how long? And what type of other forces or what type of other factors are going to come in here and derail their plan, right? So the plan is to keep banks lending, and it's not just me saying that. It even came out here in a recent article. Take a look at this headline right here. U.S. consumer credit remains healthy. Consumer credit. People have the ability still to borrow more money, to increase their credit limit on their credit cards. A lot of people doing the balance transfer thing where they pay off one credit card with a new balance transfer from another credit card. Sometimes you get an introductory low interest rate for a year, sometimes 18 months if you get a really good one. Again, pulling money out of their 401k, savings accounts being drained. All this, folks, is happening right now, but you wouldn't know it by looking at the nightly business news. It's all about what stock went up. And of course, you want to look at that. You want to look for investments, ways to stay ahead of this cost of living monster, right? But the real picture on what's happening is pretty ugly, and we need to be cautious. We need to be on top of this. Please make sure you subscribe. In our next report, we're going to talk about that retail number, how many retailers are closing, and a couple of the big stories we want to save for our next report. Please hit us a like button and keep us rolling here. Keep us alive on this channel, if you will. Everybody keep stacking. We'll talk to you very soon. Bye for now. Peace.